There's a lot to cover, so I'm going to start once again with US dollar yen, and I will get to the US dollar a little bit later in the video. Okay, with this pair, I'm still bullish on the monthly. A change came in just before the sell-off when I noticed this possible pattern here. If you remove the small a, the small b, and the 1, 2, 3, 4, and 5 here, I was looking at a scenario where with the contracting price pattern here, it was posing the possibility of a triangle for a B wave. And then the sell-off came very hard a day later after the 9th. I've modified this somewhat here because technically on the 1 hour this is completed. I think 5 waves are probably done in here. So I'm looking for a bounce over the next couple of days. And what I'm going to run on the daily is that perhaps B finished here, and we have A, B, and 5 for C into here. As you can see, A, B, 1, 2, 3, 4, 5 for C. That is the next, that is the count I'm going to run. Nothing has changed on the monthly. Let me just have a look at that. It is still an idea of a contracting price pattern with everything from here down to here, up again, down again, up again. Everything is in threes. So I'm still looking higher overall. Okay, this is moving down in stages so far. There will be a point when I give up on the give up on the bullish idea, but that is not yet. The stages I'm looking at, first of all, on 15 September, there's still a price gap here, most likely. It closed at 110.83. The low in November came down to 110.84.2. So in my opinion, there's still a gap to be filled there. So the first target for possible reversals will come on a gap fill there. So 110.83 is one possibility, and that would see a small correction here, staying beneath this low, so 1 and 4 do not intersect, and then another move down to a new low towards 110.83 and below. If that continues to decline, I'm looking at the trend support, possible trend line support running through here above 110 as support for a reversal. And if that fails again, then it will get more bearish down to a longer term trend line area running back to 2012, which will come in about 109 and change down here. 108 probably. So those are the three stages I'm looking at. Gap, first trend line, second trend line for a bullish scenario. But the bigger idea here is that there was a move up here after the finished correction. And I'm now looking at a three-wave correction of that since it's fallen from the weekly trend line. This trend line here, going back to 2015, has been intransigent, hasn't been touched, well, hasn't been broken the entire time. If that eventually goes, it will be a big break up and a big move, but so far it hasn't. I get the idea if it's going to work, it's going to need a bit of space to really ram up through it. So I'm going to look for that next week. So that is the main idea here. After seeing this idea, it gave a bearish follow-through possibility, but I don't have a more bearish one than that. On the weekly, you could pose the idea that you're looking at a bigger three-wave correction like this. 3 down, correction for an X wave, and then a bigger correction maybe like this, but I'm not going to consider that. There are too many things before that happens. So gap, first trend line, second trend line, all bullish reversals. It's pretty common to find A, B, and 5 for C for a reversal. So that is what I'm going to run with for now. The move up from today's low was pretty good, but it's sold off and it's not looking decisive at all. So that's US dollar yen for now. Okay, Aussie New Zealand is going to be interesting going into next week as the new low did follow through today, and there's been a good reversal from there so far with bullish divergence on the chart here and on the stocks. So I'll be looking for that to follow through next week. It's not really changed overall. The whole thing is just three waves. It's three down, correction, one more down to make one big three. 1, 2, 3. So I still like the idea of higher here on the monthly. The stocks is trending up and it can still reverse. The month is open for another 18 days or so. So if that's the new low, if we get an engulfing daily close like this, I will be looking for a correction to hold the last low. But in any case, as long as the bullish divergence and movement works out, there's a move up here. And as usual, it will be a flag and a next move out of that flag for the continued move up. So no breakout yet, but the possibility is there. Okay, I'll work on the Canadian dollar pairs now. I started to get interested in these this week, particularly this one, which I think I went over in last week's video. This worked out really well. I'm still looking for another high in this. It ended up holding the last Friday's low, and it became evident about here that it was not going to continue down. So on the daily, what I would say about this is that it's worth holding to the upside now. It's just I have a further idea on this that it may just see three waves up. But for now, it's trying to continue up. I would continue looking higher in this with a possible established trend line. So if it does move back into that region over the next few days, if it makes a new high and then moves back into that region, there may be support coming in there. On the monthly, it's bullish from the hammer. Now this is the count I put on the monthly. 3 up for W, 3 down for X, and I'm looking at 3 up, 3 down, and a continued move up back to 102 first of all, 102.50. What I want to say about this is it may turn into a three-wave move. Everything in Aussie Canadian has been in three waves. You can see that on the monthly. Everything's in threes. Up, down, up again 3, down again 3. So if it does continue up, I expect it to move up in threes again. Now this week is probably going to close in the wick of the prior week, and the daily may close as a little hanging man. I don't know how it's going to close. There's still a good 6 hours for that to go. It's just that trading looks like its activity is slowing down. It's worth continuing to look higher, but sorry, I'm probably digressing too much here. One moment. The idea is, the idea that I'm trying to let out here is that it may end up just being one single three-wave move. And then we may end up getting a bigger three-wave correction, and then the up move may continue. Because everything's in threes, so to have a 3 up, a three-wave correction, and then a bigger move up makes sense as well. And if that does happen, and if this trend line here does not establish itself, I will be looking for 97.50 as support, because on the monthly, well, the bullish is valid so long, the bullish idea is valid so long as the December candle holds. And this type of price interacting area here, 97.50, is valid. So if the next few weeks it does correct lower in three waves, I will be looking for that area to hold. But for now, I would stick to the upside. It worked very well this week, and I hope to see it continue next week. There's Bank of Canada news on Wednesday, rate decision, and I think the consensus is that a hike is likely. So I will go over the Canadian pairs a bit later after that. Euro Canadian is the strongest. And US Canadian I have an idea about too. I feel this is probably done here. But I'll go over that later. I did put a few charts about that on Twitter this week. Euro pound has not done anything. There was a down move this week. I was looking for it to hold that high here, and it ended up breaking that high. And it sold off from there. We need a 5 down here, which hasn't happened yet. So I don't really know what this is doing. What it suggests so far is that it could be just 3 waves to here. And now we can see the down move. The stocks are still trending lower, but it's basically going sideways. And it's in the middle of a sideways range there too, so it's got 2 negatives about it. So I'm going to look at this next week, or rather watch out for it, but until we see a 5 down on a lower time frame and a small correction, there is no real chance yet, pardon me, no good setup yet. Okay, let's have a look at the dollar, because this changed quite a lot this week, and one trade idea worked. The cable one worked out well. The Euro US dollar one for the bigger wedge did not. And I want to go over, first of all, the dollar index, because I presented a side-by-side chart today to show what could happen in this, because a lot of intelligent analysts that I follow are looking for the dollar bounce. But it reminded me of 2 things. It reminded me of the price pattern in the dollar index back in 2002 and what happened. I wasn't trading back then, but the shape of the charts is identical. But it did remind me of a situation in 2014 with Euro US dollar and what happened during the hard sell-off then when people were looking for a bounce, sensibly, but it didn't come at all. Okay, so first of all, the idea on the dollar index is that it would give a pretty good 5-wave decline here on a new low. And there would be divergence here on a new low too. So if it can find a base next week or the next few weeks, it has a chance to reverse higher. But the key point here is that it is in a 13-month downtrend and it is beneath resistance. And there's no point looking for a reversal yet. Everything is down, everything's being sold. I don't know what the price pattern is here. Count-wise, I'm not sure what it is. So the key point is that it's still in a strong downtrend. Now I want to go over the side-by-side comparison. Okay, January 17 to January 18, 13 months of action. January 2002 through November, December 2002. So 2 months less than what we currently have, but this pattern here, if you include the little hanging man thing here, this look of this is identical to what we're going through now. The only difference is that there's a bit less of a gyration here on this one, and the current chart has a bit more of a corrective period here. But it's identical otherwise. Let me pull up the chart I made today, 1 second. Okay, this is the 2000 and this is the current one. Down, up, or down and sideways, down, correction, and it continues down. And if you don't even need a trend line on this to see that it's underneath resistance because of the 8 EMA. Do you see how the 8 EMA blocks price, blocks it, and then it becomes touch reactive? The 8 EMA is going to force this down if it doesn't turn around. So that's the current one, and this is the one I just showed from 2002, where there's a smaller wave 2 sideways move here, a reversal, a little hammer like that, some months of sideways up to down action, and a sell-off here. And this sell-off did not make a new low and it was bought back up, but because it was a weak red candle, it was pushed through the following month. And that following month is this big red one here, December 2002. So I showed this today because I don't know what it was like back in 2002, but probably a lot of traders were looking for a bigger correction too on the new low, as some traders, and as I'm talking about now, of seeing a new low here and then reversing up, because the stochastics are in place, the count is possibly in place, the sentiment is essentially in place too, so it does work out for a bounce, but it can just follow through. There's no reason for it to bounce as it's underneath trend resistance. And to see it sell off here and continue on, look what happened in 2002, it just continued down. Now, there's no way of knowing that that will happen this time. It may make a new low underneath September and reverse because it is far away from the 8 EMA, or it may not make a new low on Monday and reverse and bring it back to closer to the 8 EMA, which it tends to stay quite close to, as you can see here. Because right now it's really far away from the 8 EMA. And that's not the kind of thing. Whenever I look for those huge gaps, I mean, it does sometimes gap away from it in third waves, but it tends to stick to it. So I don't know what's going to happen, but I would say that you need to be aware that it might not stop. Now, this is one example of the dollar index not stopping when it should and when a lot of, well, not should, but when it could, and it at the time seems it's more likely to, and a lot of good analysts are looking for it to. The best I can say is that it's underneath trend resistance and is being pushed off. Now, the other example I gave was the euro-dollar index in 2014. This was something I remember directly. A lot of good analysts over the Christmas period in November and December 2014 here, especially the right side of this box, we're looking for support to come in and a bounce, especially with the engulfing candle here, which was reversed the next week in December. And it went straight from a supportive area around 122, 123, 124, straight down essentially over the next few months to 104. It was a massive, continuous, unrelenting collapse, despite, sensible thoughts and counts that it would bounce. It didn't happen. So the reason I stress this is because the dollar index, with all the weird stuff going on in the world and the higher risk and all the shit going on, basically, with it in trend, under resistance, under EMAs, with a lot of strong sentiment, I would say, against it in a way. At the very least, it's worth being aware that it could easily continue, especially when possible patterns and counts and trends start to, not trends, but counts and patterns start to break down. Like wedges start to break down and it thrusts through them, or counts for a possible fifth wave do not work, then you have to switch. Instead of wave 5, you have to look for it being in 1 degree beyond that, already in third wave of the next degree. So it is worth considering that this just will continue. Now, I think it probably won't. At this time, I'm going to say that I'm looking for it to slow down and to make some kind of reversal. But it's worth being aware of that. And if there is price action of something like a bullish flag in euro US dollar, or a bearish flag again in the dollar index, it's worth following the price action. Now in this, what I would say about this, first of all, the idea is that somewhere on this new high, it will find some resistance. The close on a new high this week is a good sign on my chart, because there's going to be printed divergence here. So that is one thing to watch for next week, because if we see a move up and then a reversal with divergence, bearish divergence, that's going to give the typical, that's going to give last year's US dollar Canadian move with a 10-week down period. So it's still possible to find a high next week. The divergence is key with the new printed high, probably. Though, like I said, 5 to 6, 7 hours still to go for trading. Here's the monthly chart. There's some possible trend line resistance, but trend lines are a bit, well, everything works or doesn't work. How's that for accuracy? Horizontal resistance here, basically between a band of 122 and 127 or 128. You can see the jagged intersecting price range there to the left of 2014, all the way through back to 2003. So it's in that area, though you cannot really be precise about horizontal resistance, unlike trend lines where you can have a precision point to work against, basically. So even though there is a chance this will just continue up relentlessly, and it's worth being aware of that, the odds at this stage still favor a reversal. Now there is a possible, what I was looking for this week, I don't want to go over it for too long, I was looking for 3 up, 3 down, 3 up, 3 down, 3 up, a bigger wedge, and then the down move. It didn't do that, so I'm looking at another possible type of wedge here. Like this. And if we can see a sell-off next week, I can still work the wedge idea, though I have to say that this second part here it doesn't really have the choppiness of a wedge. You can see it's just a vertical move. That's suggesting it may not work as such, but though you can have variations on a wedge. For example, it can be, for example, and then you have a bigger wedge. Hold on 1 second. Something like that. That is possible where it makes an extended third and fifth part like this. So the wedge is separated from the trend line here. Like for example, we have that example this week on a leading wedge here on US dollar yen. What I'm trying to say is that the origin starting point for the wedge doesn't need to link up with the last point here. You see the first point doesn't link up, but you get the third one and the fifth one linking. 1, 2, 3, 4, 5 linking up. So 3 and 5 link, and you can see it's possible on Euro US dollar. What the fuck is this? It's possible on Euro US dollar that we get a scenario like that, where it extends up A, B, C, D, E, and then down, and you have 3 and 5 linking, but not 1 and 3. Okay, I'm wasting too much time on this, but the point is that a wedge can still materialize. I'm kind of obsessed with wedges lately. I do not have another price idea for this. I just don't have it. If you have one, let me know, because I would like to know about it. But the ideas I have is that it can continue and run. Of course it can, and I wanted to show the dollar index and the 2014 scenario because of that. The other idea I have is a reversal idea with the new print with divergence. Okay, so that's 2. And the third one may be that it may triangulate, not triangulate, but wedge a little more still. I don't have anything else for an ending pattern for wave 5, because the idea on the monthly, if you look at the monthly still, it's still possible where you have 1, 2, 3, 4, 5, and then a correction. So this is all still possible. There's nothing extreme about it yet. It's been very strong, but nothing really like extreme, like it's not going to slow down. Plus, as I mentioned, we're coming into price resistance zones. Okay, so that's that. What worked better this week was cable. And I mentioned, first of all, this week on Twitter, there is no bearish sign on cable. Anyone who's bearish on cable is ignoring the price action. Okay, every price action here has been a three-wave correction, and I pointed out this one this week. Correction, correction, correction. You cannot be bearish when the price keeps correcting choppily, in a choppy manner, in a jagged manner, in a whipsaw kind of flash like that, basically. Time wasting, and then it thrusts out of it again and again and again. So the trade this week was this one here. Three-wave correction, very simple, 1, 2, 3-wave correction. Thrust up yesterday, small correction today, 15-minute bullish hammer this morning, and a thrust up higher. Now, what is it doing now? Well, technically, it's still within this possible wedge here. So the point I mentioned before was that a new high here was preferred, really, because it started to give evidence that it was not likely to find a high beneath that and roll over. But I would say it's now that it's entering a new price territory up here above this high, and it's already broken through, it is more likely to find that reversal now and to turn lower. Now, can it continue up? Yes, but do I account for it? No, I don't know what the hell this is. I mean, look at this muck. I mean, this is Chop City all the way up, so I don't know what that is, but I still prefer, okay, maybe not a new low, but I still prefer to see it wind down. And again, if we can see an upward move and then a reversal next week, we will have another divergent situation here. So it has not broken through any divergence yet. I mean, to eliminate the divergence on Euro US dollar and on cable, both of these bloody charts would have to really ramp up, like strongly ramp up, and to see the divergence break through the 80 line and continue up, ultimately breaking through the high in May 17 at 90. And that's going to be a tough task. It can happen, but it is a bit removed from doing that and would require a really ferocious up move. So I'm going to look for price slowing, price turning, and price rolling over now that we have the new high in both of these. It may take a week or two, but unless I see more sideways to down flagging evidence like this, I'm going to start to look for some kind of ending pattern. So the objective has been met here, and it is within a possible wedge with a new high with divergence. The objective overall, well, I'm not sure. I've vacillated on Euro US dollar a bit more because I was looking for different kinds of wedges, but principally now that it's made a new high above September 17, a new high has been achieved and marked here. So it makes sense, I think, to look for this to reverse. The divergence situation for this pair to eliminate the divergence, this would need a truly big ramp, or it would have to spend months, well, okay, let's say a handful of weeks doing some kind of choppy muck like this, letting the divergence catch up, and then thrusting. And then the divergence would eventually be eliminated and make it above 94. But that's such a high level, I think it's more likely to find a high. So from next week, I'm going to start to be suspicious of this pair and pound dollar as highs come in. I also like the idea on New Zealand US dollar that this bugger is eventually going to roll over and turn lower, as I talked about next week. It faked out again. It's been playing a bit of a prick this week with a trendline break here and a trendline break here down from the high. It's run through two of those. And so I'm going to look for this to exhaust itself next week and to roll over, though the divergence, sorry, not the divergence, but the stocks are still ramped here. So I'm going to see how this plays out over the next few days. Aussie US dollar 2, hanging man. If this can close as a bearish hanging man candle on the daily, we will have something printed to work with, but there's still too many hours to go, to say that that is going to work out that way. But a hanging man print after such a long ascent is something you want to see up here. So then we have a point to mark and a point to work with against trend, back down. Because the idea in this pair is that we've finished the move up. What the fuck? Hold on. 3 waves up. This here can be counted as a 5-wave descent, 5-wave down move. So it's still possible to see this roll over and make a new low, but that will require the cooperation of the US dollar turning around and Aussie US dollar being weaker than it. So that's to be determined, to be seen. Okay, just a second. Okay, nothing to say about gold. Gold is on its own relentless run. Yeah, the euro has been ferocious this week. If you were bullish on euro yen, I would say you have something worrisome to look at this week, in that the very strong reversal this week has been excellent from the low. However, sorry, 1 second. I haven't put a count in on this. I'm not looking to deal with this. This is not good for my US dollar idea because it's bearish. But if this can close here with a weekly hanging man, there will be a chance for this to roll over with stochastic divergence to see the euro yen sell off. So if you are looking at euro yen after such a great run up since, well, I was interested in it here in June when the trade signal materialized, or rather appeared right here. That was the entry. So if you are interested, or rather if you do have a vested position, vested interest in being long this pair, you're going to have to be aware of the hanging man candle this week and the possible bearish scenario. And that kind of fucks up US dollar yen, but it is what it is there. Okay, so for next week, the dollar pairs are now in line for a reversal. So I'm going to watch those. Aussie New Zealand, oh, that's really ramped up today. This is looking good for the idea now. This strong reversal. Today's strong reversal on the new low on Aussie New Zealand looks very good for next week. So that's one for next week. Euro pound on a 5 down is one for next week. US dollar yen I would look for on the new low for next week if it can mark that. And the Canadian pairs. I need to see what's going to happen here. I'm going to hold to the upside in Aussie Canadian. And I have to see what happens with the Bank of Canada rate decision on Wednesday, I think, next week. Okay, I'll leave it there. Cheers.